Welcome to the Chrisman Commentary, Daily Mortgage News Podcast. I'm your host, Robbie Chrisman. Topics on today's episode include flooding around the nation, my interview with Truework's Winchell on reshaping income and employment verification through automation while balancing speed, accuracy, and fairness in an industry ripe for digital transformation, and trade news confusion is back in the headlines. Are you looking to cut verification costs by up to 50% while improving borrower experience and pull-through? Truework helps lenders streamline income and employment verification through a single VOIEA platform used by 4 of the top 5 lenders. With an industry-leading 75% completion rate, the platform consistently outperforms competitors in manual waterfalls in speed, cost, accuracy, and rep and warrant relief. They also offer free pre-approvals to help your borrowers qualify faster and only pay when a file is completed. It's used with first and second liens as well as in wholesale. It's fast to implement, easy to use, and built to drive ROI. Learn more at truework.com. The nation is gripped with flooding in Texas, the loss of human life and property, and how best to prevent similar occurrences given the increase in the severity of weather. Texas is one of the leading models in the U.S. for growth in lending. We've been saying that we've had a housing shortage for so long in Texas and elsewhere that any change to that narrative is almost ignored. Yet, builders are having to cut prices to attract buyers, unsold inventories moved higher, and homes are sitting with for sale signs in lawns for much longer. Affordability continues to be an issue, but lenders can only do so much. The U.S. Federal Reserve doesn't set mortgage rates, but it watches the same economic data as MBS buyers. The odds of a Federal Reserve interest rate cut later this month fell dramatically as new data showed strong growth in the labor market, diminishing the case for lower rates. The chances of a Fed rate cut at the next policy meeting in late July plunged to just 5% following the jobs report because the Fed is seen as unlikely to lower its policy rate until the labor market weakens. The trading week closed on Thursday with the June employment report showing stronger than expected job growth at 147,000 and a decline in the unemployment rate to 4.1%, driven by gains in education and healthcare. The resilience of the labor market reinforced the Fed's cautious stance and diminished the likelihood of a rate cut later this month. Markets responded by pulling forward expectations for policy easing in September, particularly amid signs of weakening demand and rising inventories in manufacturing. Auto sales also continued to slow, following earlier consumer and dealer activity to front-run tariffs. Slowing demand should eventually prompt the Fed to adopt a more accommodative policy sometime this fall. For today's interview, I want to welcome back to the show Truework's Winchell to talk about reshaping income and employment verification through automation, while balancing speed, accuracy, and fairness in an industry ripe for digital transformation. He's president and co-founder of Truework, a company he founded in 2017 at the age of 25. He's been dedicated to empowering borrowers and lenders with a secure, efficient platform that streamlines income verification, increases completion rates, and reduces costs. His leadership is centered around fostering trust in every financial transaction and driving innovation in the mortgage industry.
I want to start by talking about the recent acquisition of Truework by Checker, which for people that might not know, Checker's been known for its background screening solutions in employment. They weren't involved directly in the mortgage ecosystem. This is kind of their step into it. Obviously, speak about this from the Truework perspective, but what was the strategic thinking behind the move, both, I guess, for Checker, but also from Truework's perspective, and how do you see this kind of helping evolve the overall Truework platform?
The mission of Checker is to build a data platform to power safe and fair decisions. Prior to the acquisition, our mission was to create trust in every financial transaction. And already there's so much overlap between those two, like what do you want to be when you grow up and you get to scale type of visions and type of missions. And so we were each approaching the problem somewhat differently. Checker approaching it from the background check space, us approaching it from more of the financial services space. But very much both thinking about how do we engage with consumers and engage with customers to make sure that when you need to make a decision about someone, you have accurate data and you can automate decisions as quickly as possible and as fairly as possible based on what that data is saying. And so at like a very, 10,000, 30,000 foot view, we are very much solving, similar problems, obviously with in different industries. And so therefore like different kind of specificities on how that manifests in terms of how customers use the product, what types of data we're tapped into and things like that. Some actually like tangible ways that it has very real benefit for our customers in particular is Checker's already an existing partner with a ton of different payroll companies, because when an employer needs to hire someone, they do that through their payroll system. So Checker already has all these integrations into Workday, ADP, all these different payroll systems. Obviously, we rely on that payroll data to power a lot of the verifications of income that we do. And so, already right there's a lot of synergies about how can we combine some of those strengths, build better products for our customers, go to market more aggressively, all those types of great things. And then, the final thing is it's really for Checker about proving that progress towards the mission. They want to build a data platform to power safe and fair decisions. That mission is much more expansive than building a background screening business. And so, for Truework and thinking about how we fit into all of this, showing how that mission makes progress and advancing out of just the background screening into financial services is a big part of where they're going and why we're making a ton of investments and growing our headcount and doing all that fun stuff.
Obviously, Truework is no stranger to the pain points of income and employment verification, especially when trying to close loans quickly. I'm wondering how you think this merger acquisition will help to rethink this part of the origination process in a way. And I say that word rethink because I think it goes past kind of streamlining. You mentioned efficiencies, but we're kind of in a technological revolution here.
Think about not just streamlining processes, but again, like just going back to the mission of now Checker is to build the data platform to power safe and fair decisions. And so I think streamlining is I have this little step in my process. How do I make it less painful? I think what we're trying to do is rethink what the process can even be and what it needs to look like. Fundamentally, when mortgage originators need to produce a mortgage, they're looking the 3 C's: like credit, collateral, and capacity. And that problem of just trying to look at those 3 things explodes in complexity to make up all this different type of stuff. But fundamentally, lenders just need to know capacity, right? They're gonna get credit. They're gonna pull a credit report, whether it's 1 or 3. Collateral, they're gonna get some sort of appraisal done. Capacity is where we play, and that's where the problem just explodes in terms of complexity, in terms of documents you have to collect, and all this different type of stuff. But what if a lender could just say, "What's the capacity of this person?" And from there, a data platform could look at different sources of potential capacity, from bank accounts to payroll accounts to tax records, could apply the rule set that the GSEs or otherwise apply to that to turn data into a qualification standard, that to run data through a qualification standard that makes an aggregation and a determination on capacity. And that's really where we're going with the product. And I think you'll see a lot of really cool stuff comes out this year. Is really the lender just wants to know, what is my capacity? Imagine a software system that you can just ask that question to, and you just get back a number. And then that number with your credit, that's how you get your DTI. You have once you get your collateral and once you get your appraisal, and you have an approved credit decision. And obviously that statement belies all the complexity that goes into it. But at a certain point too, like you have to ask, like, to what end is this complexity serving? And if we push ourselves to just rethink the need for this complexity and the level of abstraction that I can fly at versus demand that vendors solve for me, it really allows you to be quite creative.
Yes, and that's a great response, because I do want to get into where the industry's heading a little bit. But before we get there, the focus seems like it's been, and it's not just limited to verifications, but all through the origination process, automation and incorporating technology or artificial intelligence, helping streamline things. But there's still concerns around accuracy sometimes. If you're feeding it the right data, there's concerns about fraud prevention. Obviously, the bad actors also have access to artificial intelligence. And there's also thoughts about consumer fairness. How do you balance all these things? Speed and efficiency with integrity, borrower protection, those sorts of stuff.
Yeah, absolutely. Well, a nice thing about how we solve this like problem of like what is the capacity of this borrower is that most of the time we are relying on first party data. So we are going to financial institutions, we're going to payroll systems to source that information. Now, sure, if theoretically you set up a fake company and you ran payroll through that fake company, and but that is a lot harder than just giving a fraudulent document and using that to determine capacity. So already we kind of have a more robust protection around both fraud and accuracy, because presumably if like someone is if you're pulling this information out of a payroll system, right, like it's going to be accurate how much this person is getting paid. You're not going to have a fat finger in there. Someone's going to be getting all of a sudden too large a paycheck for someone's going to find that problem pretty quickly. So that's how we think about accuracy and fraud protection, is just systematically how have we built the problem? What do we rely on data sources? What data sources do we rely on to deliver the product? So that's the primary way that we kind of think about this problem. From one of the things you said that I think it just kind of connects back to my last point is this like focus on automation. I think what we really try to work with our customers to do is to say, you have a process that has maybe 10 steps in it. You can either go about this process by saying, I want to automate steps 1 through 10, or you can say, with better software, can I have 4 steps? And what we are trying to do is to say, with better software, can you have 4 steps? You're accomplishing the same job, but you do it in 4 steps instead of 10 steps that you just automate. And it allows for like a fundamentally different way to view the problem and much, much larger cost savings. And then obviously from a borrower experience perspective, if it's 4 steps to get a loan instead of 10 steps to get a loan, one of those is going to be a hell of a lot easier. So I think that's like the framing that we try to bring. And look, it's hard because there's a ton of regulatory red tape and a ton of other reasons why moving from 10 steps to 4 steps is going to be a really, really hard exercise. So we're not like, skipping over the hard parts, but we do want to say, but you can do it, and you can do it, and we can do it, and we're going to hold hands, and we're going to jump in this pool, and we're going to do it together.
Well, can might be one thing. I'm glad you brought that up because I wanted to ask, and it's a little cheeky, but is the industry ready for some of this? Sure, everybody wants to close a loan quickly, but they get bogged down in the regulatory framework or the complexities of originating or just the process. It takes a while for certain things to happen, like appraisals or inspections, whatever it might be. But I'm going to boil it down though to, are lenders really ready for this level of technology that you feel like exists out there and can provide them?
I think they are. Yeah, I'm an optimist.
All right,
I think
next
they're.
question.
I think
Next question.
yeah.
No, I'm just kidding. I'm kidding. Go ahead, please.
No, I'm an optimist. I think they are. I think they are ready. I think obviously we work with a lot of folks who work with a lot of our great customers who have done this already, who have made it a priority and who are having a ton of success. PennyMac's a big one that we have a case study on our website. They're already doing a ton of loan production at a very, very high rate of efficiency. And so they're like, pushing themselves. They're asking these questions. We were able to help them get answers to the questions they're already kind of pushing themselves on in a pretty convincing and compelling way. And they're seeing, incredible cost savings. So people are ready. And we see that in kind of, our adoption and our growth rate. And we just want to keep making it simpler for customers to be able to say yes by continuing to improve the product and continuing to, make it more of a no-brainer.
I guess I want to close by asking you to pull out your crystal ball here a little bit. I'm not going to ask where the verification space is headed, but I do want to ask you what you see as the biggest opportunity. Maybe there's a risk involved with that, but the biggest opportunity for digital verification and borrower data solutions in the mortgage space.
It's to continue to remove like the continue to remove complexity from what the lender has to do. It's the more you can just provide an answer to a question rather than just a blob of data. And then once you can provide an answer but just not a blob of data, how comprehensive that answer can be. So you can go from I'm delivering you a blob of payroll data out of my database, and you have to determine what that data means. Then then if you make that step, which is largely the step that we made about 12 months ago, then you're going from I am just dumping you a blob of data to I'm answering a question of how much income did this person make at a given employment. Now what we're moving towards is how much capacity does this borrower have? And then you can move all the way up to just asking a question of, can I lend to this person? And then you can kind of continue to go up the value chain. But that's very much, why we started the company, where we started the company, and kind of the route that we're going. And then you find, lenders are going to have to differentiate on, how they find their customers, how they serve those customers. And you already see, a lot of lenders really focused on things like channel and digital and things like that. But anyways, I think my hope and my prediction and the bet that we're making in terms of how we run the company and build the product is that we can solve some really, really fundamental questions for our customers instead of them needing to worry about, creating these Rube Goldberg machines to answer them themselves.
That's a very good way to put it. It's definitely an exciting time out there. It's neat to see Truework leading the charge in the verification space. So I want to thank you very much for the time, Ethan. Always a pleasure talking to you.
Yeah, of course. Good to be with you again.
Attention this week will be centered on trade developments, with President Trump confirming he would not extend the 90-day tariff pause and instead begin notifying trade partners of new tariff rates. The looming re-implementation of higher reciprocal tariffs, coupled with limited progress on trade deals, will likely test market sentiment and threaten recent highs for equities. This week's calendar is light on data, including nothing of note today, unless you're a fan of the Employment Trends Index. The focus this week is on refunding supply and the Fed minutes. The only notable releases are consumer credit, wholesale trade, and the Treasury budget statement. Additionally, Treasury will auction $119 billion of new 3-year notes, reopen 10-year notes, and 30-year bonds tomorrow to Thursday. The Fed minutes will be released Wednesday afternoon. The agencies will release MBS prepayments after today's close and into the evening, and Class A 48 hours is on Thursday. We began post-Independence Day trading with agency MBS prices unchanged from Thursday's close, the 2-year yielding 3.87, and the 10-year yielding 4.36 after closing Thursday at 4.35%. Let's wrap up with a joke and some housekeeping. Hospital regulations require a wheelchair for patients being discharged. However, while working as a student nurse, I found one elderly gentleman already dressed and sitting on the bed with a suitcase at his feet, who insisted he didn't need my help to leave the hospital. After a chat about rules being rules, he reluctantly let me wheel him to the elevator. On the way down, I asked him if his wife was meeting him. "I don't know," he replied. "She's still upstairs in the bathroom changing out of her hospital gown." Thanks again to Truework, the only all-in-one automated VOIEA platform that helps mortgage providers achieve up to 50% cost savings with an industry-leading 75% completion rate. To learn more, visit truework.com.